Now in today's video, I'm going to be sharing and reviewing a very popular high income ETF that offers investors Russell 2000 exposure, but through a high income strategy. This ETF currently has a distribution rate of 14.9%, so for those investors seeking high monthly income generation like myself, this ETF will definitely be worth looking into and learning more about. Now I'm super excited to say that Neos Funds was nice enough to sponsor today's video, but like always, I'm not being paid to talk positively or negatively about this ETF or anything on my channel ever, but instead just to share with you guys some interesting facts about some interesting ETFs, in this case IWMI. Then later on towards the end of the video, give you my honest, unbiased thoughts on this ETF specifically as it stands today. All to say that if you are a dividend investor, especially one interested in high income, make sure to stick around, drop a link down below, and let's get right into it. Now, like I mentioned, the ETF that I'm going to be reviewing for this video is going to be the Neos Russell 2000 High Income ETF, or ticker symbol IWMI. Now, without wasting any time, heading over to the fact sheets from Neos Funds. For IWMI, it says the Neos Russell 2000 High Income ETF seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. Now, it's no secret that I've been a huge fan of most of the Neos ETFs that have been released since inception, and that's specifically because for me personally, my investment strategy, my objective is basically to build a long-term portfolio that offers me high income generation, that's tax efficient, and sort of on top of that as a bonus, I would love to see my portfolio grow too, but it's not necessarily the first thing I'm looking for. Now, IWMI has been trading since 6/25/2024. The net expense ratio is 0.68%. And the way the ETF works is as follows. It says high monthly income generation. IWMI aims to generate high monthly income by investing in the constituents of the Russell 2000 index and in implementing a data-driven call option strategy. Now, the tax efficiency portion is also going to be very, very important, especially because this ETF seeks to offer high income. It says IWMI utilizes RUT index options classified as section 1256 contracts, which are 60% long-term, 40% short-term capital gains. And fund managers may seek to take advantage of tax loss harvesting opportunities. Now next it says upside potential, so not only are you getting high monthly income generation, but also some tax efficiency at that. On top of that, this ETF is seeking upside potential. IWMI aims to capture a portion of the Russell 2000's upside when the index rises. Now lastly, it says professional options management leverages deep expertise and research of Neos combining decades of experience managing options-based ETFs. Now, in short, if you want to understand what IWMI basically is, it seeks full replication of the Russell 2000 index, so it is going to give you exposure to that index in full. But along with that, because of the option overlay, it's seeking high monthly income and upside participation and tax efficiency at that. Now, potential use case for IWMI, this is also important to maybe see if it matches what you're looking for or maybe not. Says IWMI may be considered as an alternative to existing small cap equity allocations to provide a tax efficient monthly income stream while maintaining the opportunity for upside participation when market conditions warrant. Now, one of the coolest things about some of these high income ETFs that have came out in the last few years, especially some of the products that Neos has came out with, is that they do offer you exposure to an index, for example, like the Russell 2000, or even SPYI offers you exposure to the S&P 500 for another example. But they offer you that exposure through a high income strategy, which some of us investors are much more interested in. Now, the next thing we have to talk about, of course, is the distribution rate, almost 15% as of current 14.9% distribution rate. Now, the cool thing about ETFs that do offer, let's say north of a 10% distribution rate, the amount of income generation potential, even with a relatively small amount of money invested into ETFs like this one, can be pretty large. I mean, looking at some of the most recent distributions, 55 cents, 55 cents, 49 cents, 56, 58, and 60 cents per share per month. Now, even if you were to average these out at say 55 cents more or less per share per month, that means that for every single share of IWMI that you own, that's how much you would receive in distributions over the past several months. Now, looking even further back at the distributions in 2024, it's still more or less the same. They were a little bit higher in 2024. Some of the distributions were actually well over 60 cents per share, but more or less anywhere from 55 to 60 cents per share on average. Now, another very, very important aspect of any high income ETF is going to be the supplemental tax information. And one thing I do have to give Neos a ton of credit for, if you look through any of Neos ETFs throughout their entire catalog, they have the supplemental tax information, the 19A-1 notices right here on the website. They're very, very easy to find. Now, the way this works is that you just click on supplemental tax information, 19A-1 notices, and you can see every single notice from every single distribution. Now, if we click on the 19A-1 notice from June 2025, for example, It breaks things down very simply. It says right here, in connection with the monthly dividend payment of 55.73 cents per share payable June 27, 2025 to shareholders record of June 25, 2025, it is anticipated that around 79% of such dividend will be return of capital. Now, what's really cool about these 19A-1 notices is that you can sort of get an idea, at least, of how some of the distributions are going to be taxed. It shows you right here how much estimated net investment income there's going to be as far as this June distribution, 21%, prior year undistributed net investment income, 0%, estimated return of capital or ROC, 79%, and total per common share, 100%. Now, for some investors, speaking for myself at least, I am looking for different ETFs that do offer a large portion of return of capital, and this is just because that's a tax preference I prefer for my investing strategy in my taxable brokerage. So now that we went over some of the basics when it comes to the NEOS Russell 2000 High Income ETF, ticker symbol IWMI, we talked about what this ETF strategy is, what it's seeking to achieve, what the distributions have looked like since inception, and even how this ETF could be tax efficient for some people's portfolios. I lastly want to share my thoughts on this ETF, and if not, I would add it to my portfolio. Now, to be fully transparent, as of right now, unless I'm missing something, I do not think I own any IWMI right now in my portfolio, and that's simply because, like any other ETF, you need to understand what the underline is, what the holdings are within it. Now, with this ETF, of course, it's offering exposure to the Russell 2000 index, which I really haven't had much of an interest to add exposure to in my portfolio, although because I don't have much small cap exposure, if I ever wanted to add some small cap exposure, I would 100% do it through a high income strategy like this one. Now, instead, in my long-term portfolio, as a lot of you guys probably know, I own a ton of ETFs, even from NEOS, for example, that do offer S&P 500 and NASDAQ 100 exposure, just because it's more or less what I'm looking for. But I will say what this ETF has to offer as far as consistent income, which has been anywhere from around 55 cents to 60 cents per share per month, a distribution rate of almost 15%, and distributions which offer a ton of estimated ROC. This ETF definitely matches what I'm looking for, if of course I ever do want to add some small cap exposure to my portfolio. But lastly, most importantly of all, I want to hear from you guys down below. Do you personally own any IWMI in your long-term portfolio? And whether you do or not, what are your thoughts on this one? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.